Now, explain the couple different scenarios if you were to purchase a house and either have the current owner finance your loan,
sure,
or possibly leave their current loan in place.
Sure, absolutely. Sometimes, let me back up. Anytime that there's owner financing or a what we call a subject to sale that goes on,
Subject to their finance.
that's exactly right. A subject to sale is, let's say we're buying a property for $100,000 and there's an existing mortgage on the house for, I don't know, $90,000. On a typical cash sale, we might only be able to pay $85,000 or $80,000 for that property. But if we can use the existing financing in place and assume that at the sale, we would pay the seller that $10,000 between the sales price and the existing mortgage, and that mortgage would stay in place. There are some benefits to this on our end, obviously, and some benefits to a lot of sellers. There are also some negative points that would need to be addressed as well. The first thing, whether you're dealing with us or anybody else that's talking about doing a subject to purchase of the house, the first thing to realize is that even though the property changes hands, we would actually take deed to the property and be the legal owners. We would be responsible for the taxes, for the insurance, for any upkeep on the property, and it would be our property. In addition, we'd be responsible for making those mortgage payments. So a lot of people that, their mortgage balance is high, they need to get out of the property, and they see themselves getting closer and closer to being in default or behind on a mortgage, this might be an option for them. Maybe not for everybody, but we have many clients that choose to do this type of situation. One thing to keep in mind as a seller selling on a subject to situation is that you're gonna still be that your credit is still going to be liable for that mortgage. And so it's important to make sure that you have a reputable buyer that is going to be making those payments, number one, and number two, that you have proof that they're being made. It's a bit of a trust issue, and frankly, if you don't trust me enough to make those mortgage payments, don't sell me the house subject to. That's the bottom line. If you smell anything that smells a little bit funny, you wouldn't want to be involved. I mean, we have several clients that we can give as references that we've worked with in this manner before. But whether it's my company, whether it's any number of other real estate investors out there, you're going to want to make sure that you do the due diligence and make sure that the payments are being made and that it's a viable solution as a seller.